Good morning, traders. It is Wednesday, the 25th of March, 2015. It's 8:04 a.m. Chicago time. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Pretty light news flow overnight. There are reports suggesting that um, the ECB is making it illegal for lenders in Greece to add their government debt pile to their government debt pile by loading up on short-term debt, a move which would force the hand of Greece into a compromise with the Eurogroup in order to raise much-needed cash. Germany's leading the charge to tighten the noose on Greece and to arrive at an agreement. German IFO Business Climate Survey continues its improvement, sixth straight month-on-month rise in a row, and beats expectations. And then the Shanghai Composite, which was at negative 0.8%, halted its longest streak of gains in 23 years. The S&P fair value today is at negative 8 points. As far as what's ahead, the only thing I have really is the 9:30 Central crude oil inventories expected at 4.75 million week on week. Cushing crude inventory, the previous was at 2.865. Gasoline inventories negative 2.5 million. Distillate inventory negative 1.25 million. And then refinery utilization at 0.4%. As far as speakers, we're looking at 11 Central. Germany's Merkel speaks on economic policy in Berlin. And then at noon, we have ECB's Weidemann, who's a hawk, speaking in Munich. At 1:30, U.S. Treasury Secretary Lewis to testify before the Senate Banking Committee. You want to pay attention to that. And then finally, at 2:30 Central, Bank of Canada's Deputy Lane is speaking. Let's have a look at where we are technically. So, as always, notice the process is always the same. It's been like this for years. First, we're going to look at what happened yesterday versus what we expected. Yesterday's trader bite. The theme of lower continues. I warned that the high is very close, and that and that overall I would be expecting it to continue to push lower, given the weak structure below. Yesterday we had an open auction in range. The opening swing was at 93.75, 96 quarter to 93.75. The market pushed below it and below the prior day's low, which was at 94. 94 quarter, pushed below, explored below, and then found buyers to come all the way back in. I was looking for it to pull back to mid or to 94 and a quarter, and then consolidate for a little bit for continuation down, and the target below was 83 and a quarter or so. And so it did not do that. It pushed right through a fairly large rotation from 90.50 to 98.50, and then just consolidated sideways, tested the mid from above. You can see it walking down to the mid from above, retested the mid, and then it finally pushed up. The target then changed once we broke into the mid. The target then changed to 2101. We could not achieve 2101. 2101 is the MC point of control. over the last several days. Here I included the, let's reduce this back to where it was. 2101, you see here this black line. It's the most traded price over the last 3 days in this zone, and it stopped at 2100 and a quarter, just 3 ticks ahead of it before it started to rotate back down. Once it rotated back down, I looked for another retest of the mid. If it were to hold, then I would be looking for the 2101. It broke through, pulled back to the prior day's low, to the tick right here at 94 and a quarter. Let's expand that. 94 and a quarter, and then from there it continued to walk down, leaving a fairly weak low at the low. Delta took a hit pretty hard on the close, but was nowhere near the trending range. So overall, the market's actually doing what I talked about since Monday, and that is to rotate back down and repair some of the poorly auctioned structure below. Remember what I said? I said that if I were a fund and I were looking to add 100,000 contracts in S&P minis, I would be a lot more comfortable if it go back to the balanced structure, try to break through it, maybe break through it and fail, and then come back up than I would to buy it near highs with lots of gaps and gap zones underneath. If you look at this FOMC day, very little traded at these prices, a couple of hundred to 500 or so per price. Pretty poor structure there. So overall, the target below was 82 and a quarter. I said 83 and a quarter. I meant 82 and a quarter, which was the gap close from the day after FOMC. And then the point of control of that day, which was a balanced day, is 81 even. Note that the overnight low is 81 half. And the market found buyers in that area and is pushing against the overnight high. Extending the structure forward, extending this MC forward, you can see here that let's make this shaded so that it's a little more obvious. There you go. You could see that overall we've broken through this MCLVN at 91 and a quarter, and we're beneath it. I still believe that the target is at 81 for now. I'm very interested in seeing what happens at 81 all the way down to 79 or so. Using this day as a template day. Last Thursday, it would be, I think, the better opportunity for day trading is for it to break through and to start to take down these single prints. Let's look at that on the market profile chart. So what we've done is here's our Fed day, this red profile here, and the balance day afterwards, which is the template day for today, what I call the template day for today. I'm looking for this day as a footprint of what the auction looked like the last time we were here. We gapped up and broke higher. We've put in a fairly weak high up top. We one-ticked the high. We had balance up top, and then we've broken down in an elongated profile back down into this balance area. So I'm expecting that we would test this 81 area today or over the next couple of days. Once it breaks through, though, we still have a long string of single prints, as you see here, to deal with. So this long string of single prints acts almost like an overnight gap. It's a poorly auctioned area. The balance beneath it is way down in the 59 area, and then this string of singles stops at 6250. 6250 was the scene of the crime for the FOMC. Remember, the FOMC started at 6250, pushed down into the 52 quarter, and then shot straight up. And so we have what looks like a very poorly auctioned structure. There it is, the scene of the crime. Actually, this should be one tick higher. scene of the crime marked here, and that's the area I'm looking to see tested. We'll see what happens today. But overall, the market structure shows that we're following what I would consider to be a normal auction, and that it is rotating back down to build a better structure. And because we're trading inside of this area, I have pulled an MC or micro composite from the Thursday morning all the way through to yesterday to see where a lot of the volume has occurred. These bars, if you're not familiar with them, this volume profile is just showing me how much volume at each price has taken place. Um, let's okay. So there's a fair amount of volume. You can see this 84,000, basically 85,000 or so, 84,500 traded at 2101. That is the MC point of control with the lowest volume node at 91 and a quarter. And to me, um, that is the immediate over underline for this zone. Does it come back through? Has it tried to test a lower balance and has found buyers? And does it come back through and push through, which puts 95 and a quarter as the next target, 2101 as the next target? Or does it rotate up, try to test again, fail back over, and then start to move down again? That's what we're looking to find out in this session today. Looking at the overnight session for clues, the market opens, it tests below yesterday's low by a tick initially in the Asian session, goes sideways, responds here to the German numbers and so on, and then it finally spikes down at 81.50. But overall, the profile is balanced. It's not offering us any information other than the fact that the point of control and the mid are below us, and it's showing a little bit of strength on the overnight session. However, it is definitely not showing us strength against yesterday's profile. So there's not much to glean from the overnight session other than the fact that the inventory is fairly balanced, and we're likely to chop around on the open again. That was the theme, the opening theme for Monday and yesterday is chop right at the open. You remember, balance, which is chop, leads to imbalance, leads to balance, leads to imbalance. So when you have a market that opens tight like you see here, it can only be tight for a while before one side or the other breaks. So here yesterday you see that sideways action. There's not a higher time frame. There's no pusher in here, and finally a pusher comes in, and a counter pusher comes in the other way. If we go back the day before, we see the same. The opening swing being 99 and a quarter and 2101.75, and then suddenly we see a pusher come in. So I'm expecting more of the same today. I'm expecting an open auction in range. The market auctioning both sides, short-term traders in control early, and I expect a higher time frame, intermediate time frame player or players or participants to come in and push it one way or another. The overnight high seems vulnerable, but I still hold to the position or to the hypothesis of a break of yesterday's low today at some point, as long as 91 and a quarter holds. If not, then things change slightly. So that's my primary hypothesis on the day. Secondary hypothesis, it does get responsive, pushes back down into the close of yesterday at 85 and a quarter, diddles around a little bit, and then finds the buyers it needs to continue higher, which tells me that the MCHVN, the lower MCHVN, is being rejected. And so if we push lower and find the buyers and push and finally end up pushing through, I'd be looking for 91 and a quarter as the initial target, and 92 and a quarter behind that. But overall, I think the primary hypothesis has a higher probability, but I'll play either side. I will flip-flop depending on what the action is. Remember, our goal as traders is to detect which higher time frames in control and to trade from that side. If a higher time frame is not in control, which means that the market is rotating in a mean regression style, then we're looking for extremes to trade against for a return to the middle. And we don't know what kind of action is sitting on the sidelines. We can measure what has happened. We can measure what has executed. We can measure who has participated, but we can never measure who is still yet waiting for an opportunity, who is on the sidelines, and that's called the third force. That's the force that has not left any footprints yet and may come in at any time. And I'm looking to detect that third force as early as possible using things like the opening type, the IB, the quality of the auction as it rotates, the size of the prints, absorption versus a push, the velocity of prints, things like lots and lots and lots of little clues that we pick up along the way. As day traders, we don't create the moves. We are just sitting there detecting moves as much as possible or as good as we can. Anyway, so that's it. Other than that, looking at crude oil, it is taking its bounce overall. What a messy looking chart. I need to reduce some of these. Let's switch to 60-minute to clean this up a little bit. Overall, we had an impulsive move down, we had a pullback, and we had a continuation move. To me, this looks like it has found its buyers and it's walking itself back up. Pay attention to the microcomposites left behind from January and February. For clues, the big number up above the equilibrium number is 51.68 here, 51.70. That is the most valuable price in the area, and that is the magnet right now. So if you're in crude and you're expecting a bounce, that is the area to watch out for, 51.70 as the key target. For now, crude oil looks like it's taking its bounce and it's getting relief from buyers as it bounces up. I don't have too much to say about crude because it's just so controlled by, what people say in OPEC and all that stuff. So to me, crude is a very short range trade. I prefer not to analyze it too much. Euro stocks stuck in the middle here. It will likely continue to trade sideways. Euro stocks is expected to stay stuck in today's range. It has not had a decent pullback yet. It had a small pullback a week ago or so, but it has not rotated back down into the area that it came from. So if we look at the trend that has been put in, a strong push and then a pullback that did not exceed this low here from the push, and then it had a second push. This looks like a continuation trade to me. I'm expecting a correction in this product. 3,500 or 34.98 is a key target below. Still waiting for that. It's likely to sit sideways, probably a boring trade over the next couple of days. Anyway, I'll leave you with that. My time is up. Hopefully you're getting something out of this, and watch your risk and pay attention to what you're doing. Be patient. Good luck.